Hey guys, welcome to this week's Money and Investing Show. This week we're tackling the retrospective subject, if you had your time over again, what would you do differently? There are some great things that we've all done in our lives that we wouldn't change for a heartbeat. And at the same time, there are some things that we'd prefer not to remember, and we definitely do them differently going forward. Hope you enjoy the show. See you on the other side. Hey guys, welcome to this week's Money and Investing Show with me, your host, Andrew Baxter, and as always, my offsider and co-host, Mitch Olorenshaw.
Thank you for having me on the show, Mr. Baxter. And to jump straight into things, I know how much you love your timepieces, and that beautiful one you've got on today. It's going to help us wind back the clock. I want to ask you.
I was hoping your segues this year would have improved.
They're better. I think that material is quite good. 2022 Segway game stepped up. But I guess today, AB, the question is, and this is a loaded question, of course, plenty of parts to it. If you had your time over again, what would you do the same? But more importantly, what would you do differently?
Okay, I presume we're narrowing this down to one area of life because this could go on for some time. So we're talking about in the investing space.
Correct, business and investing, correct.
That's good, yes. There's a few doors in my past I probably wouldn't want to open relationship-wise, that's for sure. Yeah, great question. What would we do if we did it all over again? And I mean, the arrogant answer is nothing, but I think that's both a naive and an arrogant answer. There's so much you could do differently with the benefit of hindsight. And I think anybody listening to this today, you know, if we've got a set of screens to look through called Harry Hindsight, there are enormous things we do differently. It reminds me, if you sort of look at this on a more sort of scientific or analytical frame, as two charts, one called experience and the other one called naivety, and they're inversely correlated. The more experience you get in theory, the less naive you are. But sometimes a bit of naivety is a good thing. What I mean by that, when we're all starting out, we don't necessarily know what it takes to get the journey completed. And you say to people, you know, if you had your time over, would you do the same thing again? Oh, geez, there's no way I'd do that again. Honestly, it did this, it did that, nearly killed me, but I got there. But when you've got that youthful naivety, I'll do whatever it takes to get to the finishing line. It's about getting that sort of balance right. And it's a great lens to look through if you had your time over. And yes, there are things I'd certainly do from a trading and business perspective very, very differently. Starting in the trading space, yeah, my pretty much my entire career has been focused in the derivative space, and I've done futures and CFDs a lot.
Hey, sorry, Abby, sorry to interrupt you. Can we get a rundown on briefly the story of your career from start to finish?
Okay, so I finished uni in 1992, graduated in the middle of a pretty gnarly recession. Couldn't get a job. There were no jobs to be had at that particular time. I managed to jag a temping job with an agency doing some admin at a bank, and they weren't recruiting anybody, recruitment freeze. And externally, you could move internally. And I applied for a couple of internal jobs, which they turned me down on. And I asked to meet them and say, why have you turned me down? And they said, we're only recruiting internally, not externally. I said, well, I'm working in the building, I'm internal. And I actually blagged my way in the door. And I think, you know, that determination is something that's actually served me quite well throughout my career. Started off there, very quickly realized that's not what I wanted to do, and parlayed that into getting a job in London in an investment institution. And that was really my start in the investment space proper. And I thoroughly enjoyed that. I was very fortunate. Two of the companies I worked for there were major institutions, and I was very determined to succeed at both of them. So I had initially a very low rung on the ladder job, and I made the best out of that massively and engineered it into the trading floor, which is really where I spent the rest of my career in London. And I'm very grateful for that particular pathway as opposed to coming in as a trainee in the trading floor space, because I think I had the opportunity to look from the outside in rather than being in the tent straight away. And that's what really prompted me to want to be in the tent. I think, let me try and explain that in a slightly different way. If you fall into something, you're in it and it's what you do. Whereas if you're from the outside trying to get into it, it's a prize. You get to do it rather than have to do it. And it's something I genuinely wanted to do, and I got to do it, as opposed to being a successful graduate trainee, getting in there and it's just what I do and I have to do this. It's something that was a prize for me. And I've always looked at markets in that way, as a gift. And I got to work with some pretty high achievers in that space. You know, a couple of the guys I was working with in the mid-90s were pulling down, 15, 20 million quid a year income, which
that's a lot.
Is good money and is still good money in today's terms. And it was an absolute eye-opener from coming from a working class background in a small town to seeing those kind of telephone numbers, and that actually there is no ceiling on what you can earn in investment markets. And again, that was something very early on that cemented my future in that space, that you eat what you kill. If you're good at what you do, your remuneration is extremely lucrative. And if you're very bad at what you do, then you're going to starve. And that sort of Darwinian theory is something I wholeheartedly agree with in the business world. And I think that's where a lot of my values today really stem from, that time in my formative years, early 20s in the business sense, that, you eat what you kill, and you got to be on top of your game day in, day out. There's no safety net, and very grateful for that. And obviously learning how to trade in that space, it's changed a lot. When I first looked at charts online, it was a green monochrome monitor that probably would have given you retina cancer if you looked at it for too long, with very, very basic analytical tools compared to, what's freely available online now. So, the world's very different back then. And the world of derivatives too, options really started in 1974, so way before my time, but they weren't mainstream. And I remember one of the investment vehicles we had that we built was a derivative trading fund, which was absolutely brand new to that firm at that time, and so it really was at the sort of the vanguard, if you will, of derivatives being used in funds for retail investors. And so I got a really good grounding in futures and options, which have served me very well personally with my investing, but also obviously for our business, because they're the backbone of what we do.
Exactly right. And fast forward 30 or so years in total, and here we are today with Australian investment education, which we educate thousands upon thousands on to do exactly what you've done. Question now, AB, we've got a brief rundown, thanks for that, is if you had to keep a few things exactly as they were, what would they be?
Yeah, I think that pathway in would be something I'd definitely stick with. Sometimes you think, well, gee, that was a hard slog, and it was. I didn't go to the right school. I worked hard at uni, but I didn't go to the right school. And I saw people with the red carpet rolled out for them because they went to Eton or Harrow and the right school and got in there despite their abilities. And at the time, that did cause me a level of resentment and just made me want to prove myself even more. And I'm glad that it wasn't that way, because, as I say, if you've got to fight for something, it truly is something that you value and you actually want, as opposed to something that you take for granted. So in that respect, I wouldn't change that aspect to it. I think from my trading, I'm nowhere near as aggressive with my trading as I was when I was younger. I would have a crack at it properly.
Which is a good thing, right?
And when you're younger, I think you have to, because you really don't have anything to lose, and you're just starting your life. You've got a whole lifetime ahead of you to get it right. And I think, I had a red hot crack at it, and it was good to do that, because you've got to look into the abyss. It suited my risk appetite at the time. I had nothing and I wanted to make something, and I did, made a lot. Same with property. I bought my first place in London. I think it was sort of 24 or something like that, and it was a dreadful property when I look back with hindsight. Matter of fact, like now my sort of old stomping ground is Mayfair. That was sort of where my journey in London sort of finished up. But I oftentimes will go back to that particular place and have a wander past and look at it, and it's really humbling to think that that's what you could afford at that given time. And you thought it was amazing, and I did, and I still do. That I got my start at 24 in the property market in London, even though it was in a dreadful suburb and a pretty average property. It was my start, and if you never start, you never get anywhere. So it's good to reflect on those things. But over time, as your experience grows, there are things that you would definitely do differently. And, within our business, I think we've been very good at being able to pioneer investor education on the scale that we do to thousands of people around the world. We've embraced online massively, as everybody has with, the pandemic. And I only wish that we'd done more of that earlier, because the experiences that we can give our clients remotely without them needing to travel on a far more frequent basis, in a far more conducive, non-intimidating, in a big classroom with lots of people where it's scary to ask questions if you're not sure, to better create an intimate environment online to do that safely. And I wish if we had our time over again, we would have embraced that a lot earlier. The serendipity of that, of course, is it's also shaved off probably 100 flights a year for me too. And at the moment, I'm not missing that travel, I have to say. But that's something I think I'd like to have seen us done a little bit earlier. We still were at the vanguard of what was going on, but we could have been even more so and been the pioneers, if you will, of that and taking it forward. Because that client feedback in this new environment has just shifted massively to the positive, because it's convenient for people, it's less time consuming, it's cheaper, it's far more effective, and you can repeat it. And as I say, I do wish as a CEO that I'd maybe taken some heat from our IT team earlier and pushed harder for rather than doing what we did, but we've done it now, which is fantastic. So yeah, that's an operational one. We've also embraced technology in a lot of other areas. We were the pioneer of something called Easy Trade, and it's enabled us to go from having a large trading floor with a lot of brokers talking to clients on the phone to being able to have a very small, highly skilled team that's able to reach thousands around the world using technology. And the technology we provide is amazing. As a broker, which client are you going to call first to put out a trade to? Probably the one you make the biggest commission from. We're all human beings after all. We eat what we kill, which doesn't really serve people that are playing at the small end of the spectrum, yet all clients are important. And those clients would be maybe not as well serviced as you'd like. These days with technology, all of our clients get the same information at the same time, creating a level playing field. And I think from an efficacy point of view, that's probably one of the biggest boxes for me in terms of values that we ticked, rolling out that technology. So I'm so proud that we did that, and I definitely keep what we did there. We were at the cutting edge of doing it, which is pretty cool. Looking more specifically in the trading space, and this is one I will kick myself over that it's taken me as long as it has to arrive at this conclusion. 2021, there was a trade I took, which will be the last single stock options trade I ever do.
It's a big call.
And I've been in this space a long time. I know how to trade, and I know how to trade options in this space. And I picked a really nice meat and potatoes company, low volatility, put a geared strategy in play on it, and the company's board made a very poor decision to make an acquisition and saw the backside fall out of the share price. Killed the option strategy. And here's something where, even with my level of experience and picking the right strategy on the right kind of company, I've been handed my backside on a plate. And that's very humbling. That shouldn't happen, but that's the reality of trading. There's that uncertainty and variable that can come out of left field to knock you off your perch. It keeps our ego gone and keeps us honest and true with our plan. And so for the last probably 3 or 4 months, one of the areas I've really been focused on is in the exchange traded fund space, not specifically to replace options trading. I'll always trade options, but to replace the underlying instrument instead of being stocks, to use ETFs as the underlying instrument. There's a lot to unpack in that, and there are a lot of reasons for it. But zeroing out stock-specific risk is something I'm at my stage of life with my current risk appetite. I'm very happy to do. You can still get plenty of color in there. You can get plenty. You want to rev it up and redline it, you can certainly do that too. But for someone starting out in the journey, we've now got a sort of access point which eliminates that stock-specific risk. And that's something I wish I'd arrived at much, much earlier, but it always happens when there's that intersection between what you're looking for and what you're dissatisfied with, and I guess that was the last dissatisfied with trade I will have in the single stock space. So it's opened the door for our clients now to a great new trading strategy which marries the beauty of options trading with the underlying security of using ETFs, exchange traded funds, instead of single stock stuff. So I'm really happy with that, but I wish this was a conversation we were having 10 years ago.
Well, a tribute to you. Obviously, something happened in the market in real time. You then amended the strategy and created a product for thousands of other people potentially to get into too as well. It's awesome. If you had to talk about advice to a brand new investor, we've got clients from all walks of life, obviously, AB. A brand new investor in the stock market right now using options, what are you doing? What are you playing with?
I think for somebody new coming into the markets, most important thing is to upskill and know what you're doing. This is by no means any place, and it's not just options. I think the stock market in general, unassisted, is not a safe or fun place for somebody that's brand new. You do need to get schooled on it before you get into it. And I think picking quality option strategies, there are so many to choose from. We trade probably 14 or so fairly regularly here at different times of the trading season when market conditions are appropriate and so on. I'd scale that back down for someone that's new to maybe 1 or 2 strategies, but with the right kind of underlying asset, because it doesn't matter what the option strategy is. If the underlying asset isn't right, it's going to end in tears unless you happen to be extremely lucky. And I'd never base an investment strategy around luck. That's something that unfortunately a lot of people are finding out in markets right now. They made money last year, but maybe they're not now, or they made money in crypto, but they're not now, or they made property money and now they're not. That may have been pure luck rather than skill. So, get started properly, get educated, pick the right kind of underlying assets that aren't too spicy, that give you the ability to generate great income, but without that stock specific risk, or in some cases not even sector risk either, just market risk only, which is a dramatic risk reduction for people. And I've always prided our organizational priorities towards not just focusing on upside, but risk management being key. That's why I've been able to trade for 30 years and I'm not living under a bridge. I haven't blown up because risk management has always been a very, very important part of what I've done. And this is a terrific move forward in the risk management space. And I'm very, very proud that, again, we've got something we can put out there for people that will enable them to get all of the opportunity, the upside, the shiny stuff, the things that people want. But it does a very, very good job of removing a lot of the higher levels of uncertainty and risk from trading, which can, particularly for new people, can clatter you. But as someone that's a 30-year veteran, can still clatter you. So if you can take that out of the equation, then that's a really great thing. So for people new, this is how I would be starting out if I had my time over again. If I had my time over again, I wish I'd started earlier. I was like 15 or 16, I think, when I bought my first shares, and I would have started earlier and harder. Maybe that naivety index versus experience was a great thing. And again, as we get older, we lose that youthful enthusiasm for things. Just go in and go hard and work it out as you go along is a great way to learn when we're younger. But we put so many limitations on ourselves as we get older because we feel we're more experienced, have more expertise, got more runs on the board, have a significantly more developed ego, and their motivation changes. And sometimes taking it back to the rawness of that youthful enthusiasm is key. It's why I enjoy working with you.
Thank you very much. And it's why I enjoy working with you as well. World-class basics is something that flows through our organization, and one thing that we stress to our traders, right?
Yeah, world-class basics doesn't sound very exciting, does it? And I keep going back to this, and it's our catch cry in the business. It's our catch cry for our clients right now, and for people that are in our, listening to this podcast or watching us on YouTube, wherever it may be. What do you mean by world-class basics? And very sadly, we all want to learn more. We want to grow. We want to feel that we're, at a more advanced or enhanced level with what we do. And that jump ahead is a poison chalice. Yes, you feel good that you're learning more and you're playing maybe what you see as being a higher level. But if you haven't taken the time to build the basics out properly, you're onto a very, very wobbly platform, to say the least. I see this with my kids. My kids are pretty young, and the youngest is at the moment 13 weeks. The eldest is 7. So I've had a fairly concentrated period over the last 7 years watching how my children develop, and there are 5 of them. So it's a pretty good case study. And that notion of, they get very frustrated crawling. They want to just better get up and walk or run around. But if you don't crawl, you never develop the muscles properly, the strength, the core strength to better walk or run. And trading and investing is the same. World-class basics, being able to crawl around so effectively is key. It's true to absolutely everything. Yet our desire to want to appear to be more sophisticated, more advanced, often overshadows that. I'll give you a really simple example. And, if you think about the romance space, and irrespective of your gender here, you can sort of adjust this story to suit. You come home, your partner's sitting down and you look great, put on some music, make a cup of tea or pour him a glass of wine, light a nice candle, foot massage, how's your day, actively listen to someone, put some cologne or perfume on. These are all part of it. We all know where this conversation's going. You've got a particular objective in mind. Now, that's all well and good as tools to help get you further and further towards that objective. But if you go and hop into bed without cleaning your teeth, you're probably going to get kicked out, and that's the end of any prospect of having any kind of action that night, full stop. And there's an example where you spent all the time working on the peripheral stuff, but you've managed to totally forget about the basics of clean your teeth before you get into bed if you want to kiss somebody.
Great analogy. That's our basics. Kind of analogy.
It's I don't know where that one came from, but it's world-class basics. And if you get the basics right, if you're a trader, understand if it's in a downtrend, don't buy the stupid thing. It's in a downtrend for a reason. It's got no momentum. You need it to base out. You need it to show some level of support. What's the price action? How volatile is it? What's the news flow around that? They're all really basic steps, but in our desire to throw on 56 indicators on a chart and then gearing it up with some sort of derivative instrument times 100 leverage, you're building a very, very fragile and very, very weak business on the back of that. Get it back to the simple stuff, get that simple stuff done well, and away you go. And now we're in the situation where we're we're opening up travel-wise. I've got somewhere in mind. Italy is always up there somewhere, but I want to get my wife and particularly my father-in-law actually down to Patagonia in the southern end of Argentina. There's a chef, Francis Melman is his name, and he's one of the most renowned chefs in the world, Argentinian chef. Everything he cooks is over fire. Talk about world-class basics. There's no fancy cooker. There's no superb pans and all the different things.
Basic.
Just straight over the fire. And potatoes in particular, you talk about basic foods. The majority of what he cooks are based around potatoes and doing it exceptionally well. And you won't get into one of his restaurants. I'm going to go down to Patagonia and I'm going to go to his place down there and I'll have dinner with him.
That sounds good.
And it will be world-class basics done to the extreme. Yet again, we all want this, got to have a bit of this, got to have a bit of that, and all this extra cream and caviar and all the nuances and chichkas to dress something up, when you can have the most amazing food that's just cooked on a fire, cooked with love, and it's world-class basics, and it applies to every facet of life.
Now I'm starving. Thanks very much for that. We've spoken of food, getting into bed with the partner, and trading, which is an interesting mix there. But
3 of your most important sort of drivers in life, mate.
Yeah, couldn't agree more. Absolutely. I've learned from the best. AB, that's an awesome rundown. And I guess when you look back in time, there's a lot you'd change. There's a lot you'd still do the same. But all in all, you've got the lessons now behind you to help others, which is the most important thing. So thanks very much for your time today.
It's an absolute pleasure, Mitch. And, they're my lessons. Everyone's got to run their own race, and one of the things, talking of kids, you can't be a prophet in your own land. My kids don't always want to listen to me. They listen to a third party. And this may be the same for one of our listeners here. As someone that's been in markets now for 30 years, if I had my time over again, I'd start earlier. I was very lucky that I got educated very well on trading as professional development within my career. Get yourself educated and be very mindful. World-class basics. Don't get blown off course looking for the latest fancy trading strategy and leverage. Get it on something that's going to be relatively low risk and let your money work for you rather than you work for it. That would be what my biggest takeaway would be. And I'm kicking myself that I didn't get there with this type of strategy maybe 10 years ago, but we're there now. Can't do anything about the past. We live in the present and it creates our future. And this is a great future for our clients. I've got no doubt about that.
Well said. Thanks very much, AB. Cheers.
Absolute pleasure. There you have it, guys. Make sure you give us a review and a rating, and we'll look forward to hosting you next week.